Welcome to this week's version of Nickels and Dimes, our weekly video series. Well, you might have heard in the news recently that there's a good chance the Federal Reserve lowers interest rates. So we're going to talk a little bit about that today. And by the way, if you find value in this video, if you see it on Facebook, YouTube, or LinkedIn, or if you get it in an email, go ahead and share it or forward it. So let's jump in and explore what happens when the Fed lowers rates. And as I mentioned, there's a very good chance that the Fed is going to reduce interest rates in the very near future. And I'll show you what the probabilities are in a minute. But here's some industry trends over the last 5 years in terms of the federal funds rate. You might recall that rates were low for many years, and then they started creeping up, and then we had COVID happen. So 2020, the Federal Reserve lowered interest rates significantly to essentially zero. And then we had inflation and the economy started improving. And in order to curb inflation, essentially to try to slow the rate of inflation, the Fed raised rates. And you could see that here in this chart. And now we're likely going to get in a cycle where the Fed is going to start lowering interest rates. Well, what's the probability of that happening? Well, at least statistically recently, there's an 80% plus chance of a very convincing rate cut in September, which really means 50 basis points or a 0.5% reduction. And there's a 94% chance of at least a 1/4 point or 25 basis points reduction in short-term interest rates. And keep in mind, the Federal Reserve controls short-term interest rates. So really, what does that mean for consumers? The good news is it will be cheaper to borrow money. So lower monthly payments on mortgages, of course, if you're buying a new home, and a potential eventual refinancing opportunity. You got to go through the cost benefit analysis of doing something like that, and potentially lower interest rates on car loans and credit cards. So that's good news. If you own a business, lower rates mean potentially, for example, taking out a loan to invest in new equipment, maybe even hire more people or expand a company's operation. And for investors, stocks and other riskier assets like higher growth assets often become more attractive. Of course, on the flip side, as you know, a rate cut can mean existing bonds are likely going to be worth less. What that means is there's an inverse relationship between bond values and interest rates. So in other words, when rates go up, bond values go down, because the logic is, well, that bond, that existing bond that's in the marketplace is worth less because I can get a new bond at, for example, a higher interest rate. Now, at the same time, when rates go down, bond values go up. So I think much of the move that we've seen in stocks and even the bond market has been anticipating lower rates for some time now, for some months. So I believe that much of the move that we've seen, at least recently, to the upside is likely priced in. So let's further explore here. A cut can also make the US dollar weaker against other currencies. And if the Fed does not cut rates, it might mean that they're more concerned about inflation or economic strength, which could make the stock market a bit nervous. So regardless of what the Fed does, it's always our advice to make sure you have a strategy and a game plan so that you're not swayed by what the markets do per se. Because again, investing in the markets is a long game. So you have to be patient. And of course, regardless of what the Fed does, we want to, again, have a plan that we have consistent discipline and we're not making emotional decisions, because we all know a human being does not necessarily make good investing decisions when they choose on emotion. So I wanted to share that with you today. And by the way, as I'd mentioned, if you find value in this video, if you see it on the socials, or if you get it in an email, go ahead and share it or forward it. To that end, if you would like a second opinion on your portfolio or financial situation, here's our website at nickelswealth.com. Click on the upper right-hand tab, this Request an Appointment tab, fill out the information, and one of our advisors will reach out to you and answer your questions and to give you some thoughts in today's financial environment. Thanks again for watching. Bye-bye.